Welcome, welcome, welcome. How's everybody doing? Hope you are doing well. My name is Andrew Kuhn, sitting next to Geoff Gannon. Jeff, how's it going today?
It's going very well, Andrew. How's it going with you?
Going great. We hope it's going great for everybody else as well. So in today's podcast, we are going to be doing a Q&A specifically related to the Berkshire letter. I did a call for questions saying that we were going to record a podcast going over the Berkshire letter. What are some questions that people have had since reading it themselves? And we'll talk about it on a podcast. And we are going to jump right into that. First question, and this was probably the most common thing I've seen throughout Twitter, is what exactly went wrong with Precision Cast Parts? He talked about it in the letter how he took a write down on the company, $11 billion. Do you have any thoughts on that? He said that and this person points it out, said that he calculated basically like the normalized future earnings wrong, and he took a write down on that. Do you have any thoughts on that?
Yeah, he sold the airlines. He can't sell Precision Cast Parts. You have it for the earnings stuff from before?
I sure do.
Okay. So
you know how I got these? I got this from QuickFS. If you go to quickfs.net and you sign up, tell them you came from Focus Compounding. All right, go ahead.
Yes.
Thou shalt always plug.
Okay, so QuickFS. QuickFS.net, what is it?
.net.
.net.
I had to check because I'm like, is it .com or
no,
.net? Yeah, we're good.
Yeah. And say the Focus Compounding sent you. So it wasn't a low price. So if you can see what the price was, can you give me what the EBIT was or something in the last year?
Yes.
2015 would have been the last full year, or 2014?
It looks like the EBIT was about 2.6 billion. The year before is 2.6. The year before is 2.1. So call it, 2.4, 2.5.
Okay, and then
for those 3 years.
Do key ratios? So that's a high price, first of all, because he paid, what did we say, 30?
I think I said, I have it written down, 37 billion.
37 billion.
And they wrote off
billion.
about 30% of that.
Right, so it's a teens EBIT multiple, which is high for Buffett, at least. And then you have the EBIT margin.
Yep. Let's see. Right there. Yeah.
Okay.
25s.
Yeah. So, I think he overestimated the cyclically adjusted earnings is probably the reason why they wrote it down. I don't know, other than that, if we can look at the growth rate. Do you have the growth rate there in like sales and stuff like that?
Yeah, year-over-year growth.
Right there. For when they bought it. Okay. They supplied the aerospace business, and there's a huge decline in that, and there will continue to be a big decline for a while. Certainly he believes that, and I think that that's shown up in their business already.
Do you think traveling via airline will roar back once everyone's vaccinated and the world's back to normal? Do you think business travel in the future is going to look different?
I think my feeling about it is probably why Buffett sold the airlines, which is, I think there's a high risk that if even a small part of business, not small part, but if a meaningful part of business travel does not rebound, then the economics of airlines will be a lot worse. And I don't know if the competitive situation of what they do will be good. Business travel accounts for a huge amount of the profits of most of the airlines. So even if we have, say, 100% of non-business travel returns, but we have a 20% decline in business travel, so you have 80% of what you used to have, I don't think you can really run an airline with that right away. I think that's not, that would reduce your profitability by quite a bit. By a lot, because I think that most, in terms of your profitability from before, it might seem, the risk that people thinking about it might say, okay, well, really your profits are only going to decline by, let's say, 10 to 15%. right? If you thought about how much of your profits were coming from business travel, let's say business travel was 80% plus of your profits, it's going to drop by 20% of that segment. So really you're talking about 10% or less decline. But it's a high fixed cost sort of business with not enough barriers to entry and stuff to stop people from over competing. I shouldn't say barriers to entry for new airlines, but I mean barriers to just underpricing things. And it's very possible that you'll have too much capacity for a while. And so when I was saying sort of like about the airlines before, when we were talking about it during COVID, why would you be building a lot of new airplanes? I don't know that you would. I wouldn't want to. It would be a business that would, I would have sold the airlines just like he did. So is that necessarily ruinous for precision cast parts? If the airlines aren't a very good business, but there's a lot of demand eventually for it, maybe. I think his entire vision of what the aerospace business, of what airlines were going to be in the U.S. and stuff, has completely changed. Buffett's. I think he was wrong about that because of what happened with the pandemic.
Why do you think airlines have been attractive to him in general?
Well, they look pretty attractive to me too. I've looked at railroads. I've looked at cruise lines. He said about railroads that it took them 120 years, but they finally got rationalized. There was constant overbuilding and everything. In the U.S., air travel growth was slowing down enough, and it had consolidated among a few very large carriers,
which is typically when he gets interested.
Yeah. And in fact, it was even less competitive than it appeared because Southwest doesn't really do international, and it carries a huge number of miles, but not necessarily the huge number of revenue compared to other ones who have international business. So there was some limit on the. It was more rational that way, right? And they were sort of targeting. Southwest was always solid, but the others were sort of targeting borderline investment grade type. We hope to be real companies that aren't going to go out of business and stuff, and that we shouldn't be junk rated and stuff like that. They were buying back their stock, but they weren't putting a lot of new capital into the business. So when I talk about industries, I say, well, the lime business looks like it'll be okay and stuff. What I mean is 10 years ago, or more than that now, demand for lime dropped by a huge amount, like probably how it never dropped since 80 years before that. So it had like the worst drop. Other things, the same thing, cement and stuff like that. And yet it didn't devastate the companies because they didn't cut their prices and increase their production because they said that's stupid to do that. If you get to that position with other sorts of companies, that kind of level of rationalization of the industry, then you can be successful. But if an industry is growing too fast and new people are coming in, then you have a real problem. And I think it had gotten to be looking a lot like I said, like railroads and like cruise lines, which have been a bad business for reasons of building too many of them and oil being too expensive. But if you put that kind of thing aside, it was more in line with those leaders in those areas where it had really gotten down to just a few companies and a much better business. I would have made the same mistake probably with airlines. I don't know that I ever liked them as much as Buffett did, but that it was looking like these could really be good stocks, produce a lot of free cash flow, buy back a lot of their own shares. I certainly would have looked at airlines and thought they were going to do okay. But now I don't know.
Got it. See, people pay attention because someone wants to know, were there any parts of this year's letter that made Geoff write, Did you draw any conclusions from the lack of discussion of various topics?
Yes. I drew the conclusion of a few things. Buffett doesn't directly criticize individual people. He generally shies away from controversial topics. I think he tries to tell stories to have you draw your own conclusions about things from them rather than saying something about that. Like Charlie Munger sort of sermonizes, he'll give his opinion and try to kind of hope to convert you that way. I don't think he believes that he can convert you, but I don't think that Buffett does that kind of thing. He follows more of like a Socratic method type thing. You get the idea of what he's focused on and what he's thinking about it, but he doesn't really talk directly about it. That's what I felt with the annual meeting thing where he's talked about in the short run, things can be as bad as the Great Depression, but in the long run, it's all okay.
Yeah.
I think that's a pretty clear message. And people are saying like, well, is he bullish or bearish? Well, he's saying both. We don't know what the outcome is. It can be very bad in the short run, but in the long run, things
What did he
okay.
say? For a couple of years, people didn't realize they were in the a Great Depression.
Yeah. And he showed the market crash, and then he said, look, it went up here and then, went even further down and all that sort of thing. But he also said, but look, like even with that period is still a period that people would be happy to live through, the long-term compound return that they got for it.
Yeah. Never bet against America. And he reiterated that in this year's letter as well.
Yeah. At the same time that he wasn't really buying a lot of other stocks or something, He doesn't give you a completely clear message that way, I guess, that people would want.
Never bet against America. Well, that's what they say, right? Don't follow what he says. Follow what he does.
Yeah, Buffett's rarely going to say like, oh, everything's... I mean, at times he said some things. Look, he's very clear bonds are too expensive.
Yeah.
So, I mean, if you ask him where do you think interest rates will go, he won't say higher. But if he didn't think higher, then he wouldn't give you a paragraph saying don't go into bonds ever. That's really a mistake. That wasn't a comment on interest rates. It wasn't a comment on inflation. But I bet if you asked him, he'd say, well, there can always be higher interest rates. There can always be higher inflation. Is something I think about. Did I say, Did I write, in some parts?
Which, for those that don't know, Geoff usually writes that when something's questionable to him.
Oh, yeah, there were some things. One, he said that the majority of the write-off was precision cast parts. He didn't say that all of it was. So they wrote off some other stuff. And what was the other one that I put it down for? So that was one. And then, I did put that down because he sort of sold down, not exactly, but he sort of sold down Apple. We don't know if they would keep selling or whatever, and we'll see in future things. But he sold down Apple only in about proportion to their Apple's buybacks. It wasn't really much more aggressive than that. It was slightly more aggressive, maybe like 10%. His rate was maybe 1.1 times what it should have been. But that's almost like taking a dividend from Apple instead of a buyback, using theirs as a dividend instead of a buyback, which actually is something he did by agreement with some companies many, many years ago, where he would agree to sell into their buyback to keep his same proportionate stake. I have no idea if it means anything and if he might just sell out of Apple eventually, but I did notice that he sort of, if you think about it, he's sort of taking a dividend from Apple without really eliminating his percentage ownership in any way. He's kind of converting a buyback into a dividend.
Somebody asked, why did Warren Buffett omit any updates on his latest investments and how his operating companies were doing, and spent the letter recounting past glories that have been heard many times before?
Yeah, you mentioned that you thought that it was like recounting past.
I said that. I said I felt like it was the life, flash before my eyes type of situation at the end of a movie.
I think there were maybe 3 reasons for doing that. One, I think it's a great advertisement for buying a company, and he wants to buy more companies. That's by far the best way to do it. We can think of all different ways of doing it, whatever, but for the kinds of businesses he wants, it's either word of mouth of someone else telling them about that, or that section. That's the section that would appeal to people who might want to sell their company, is reading that section.
Yeah.
If he's going to get someone to call him who wouldn't normally, it'll be because they saw that section or someone told them about that section. Because someone will say like, oh, you sound kind of like the person who did that. And, I think the other reason, the number 2 reason I would say, is I did feel that it had a, I don't know if I want to call it political, because I don't think that's the right word for it, but I think it had a focus on a sort of a model of what good things to be doing, and for capitalism. And I think in a sense, it's very indirect, but in a sense, I think he did kind of gently promote an idea of those people creating those businesses over time. And I do really think he kind of stressed these aren't the things that people are buying today, the stocks people are buying today and talking about stuff. This is what business really is and stuff. This is what we bought. This is what's successful. And it's not about New York and California, and those aren't the only things out there. And it's not all about story stocks and things where you talk about the conglomerate things. And I think that's the third thing, which is that I know people want him to talk about SPACs and things, but I think he wants to talk about that and not talk about those sorts of things. And so that was my feeling about it.
Yeah. Somebody asked directly, was Buffett inspired to write about conglomerates / stock promoters by the surge in SPAC promoters? I mean, yes, absolutely.
Yeah, there was stuff called letter stock. I don't know if people know about all this stuff, but there were some things that were similar. A lot of times people were buying into conglomerates. It's hard to explain to people what I mean by conglomerates from the 60s because it's nothing like the conglomerates you think of today. You think of like, AT&T is a conglomerate or something like that. Something that might spin some things off and whatever. But we mean like built around a particular person who has sort of a cult of personality and would use their overpriced stock to buy other things. And there'd be a lot of speculation about what are they going to buy next. And then they would buy that. People would get into it to be with that person on rumors of whatever was going to happen. They would do presentations to Wall Street and kind of do that sort of stuff. They would maybe fake some of their earnings stuff, manipulate it so that it would look good, and manipulate it of the thing they were buying so that might look good, and sort of do arbitrage of the earnings multiples, which he talked about there. And it kind of made the thing of creating something using fictions of how people might value it and analysts and stuff. You take something which is the same asset as something else and make it look like it's worth more. The best example I can give of this is the kind of thing it's similar to today is WeWork. WeWork, I was telling you about it, I was reading a book about WeWork, and one thing that stands out, which is very of that conglomerate era, is the founders walking through and saying, how many desks can we put in here? How much revenue would that be? But what he's thinking is, our valuation is this much per revenue, so we can afford to pay this much for the building. Regis can't pay that much for the building because they're valued at a lower multiple of revenue. We'll both get the same revenue for the building, but the building is worth more to WeWork than to them because venture capitalists will pay WeWork on a higher multiple than something that's essentially our same business. And the same thing here, the conglomerate stuff, what they would do is they buy businesses that weren't growing very fast and stuff, but through their acquisitions looked like a growth stock. So it's like a fake growth stock sort of thing by buying up all that. The good example, the one that Buffett would highlight as being the example of what to do is Teledyne or Berkshire Hathaway itself. But the bad examples, I could go through a lot of them and won't say their names and stuff, but there are a bunch of people who became famous for a brief time and then kind of flamed out and are mostly forgotten to history. But they were the kinds of people you see sponsoring the SPACs and stuff today, and maybe in 15 years or whatever, we won't remember many of their names, but we might remember a few, I think that era had a big impression on Buffett and his investing, the conglomerate craze,
Where does Precision Castparts acquisition rank in the history of Berkshire mistakes?
Mistakes of commission, one of the worst. It was a very big one versus the size of the company. It's hard to think of something that's really bad like that. Yeah. Buffett hasn't had a tremendous record in cyclical stuff. Like you were saying, actual airline stuff, he has not had a good one in. But I'd say he has a mostly poor record in anything tied, or at least a record that he would have been better off buying just more of the stocks he already owned or something. Anything tied to oil, aluminum, gold, metals, whatever, those sorts of things. Not that great. The problem with this one is such a big acquisition. So Buffett's great skill has been position sizing stuff. He bought some stuff that went to nothing. He bought what did he buy? TXU bonds, I think, that went to basically got impaired, and Irish banks, which went to nothing basically. Yeah. So he has had total losses on things, but they're not large. And then he did an acquisition like Burlington Northern Santa Fe, which is a great acquisition for the amount of money he was spending. That sort of thing. His big deals have been very successful. The size of his deals have been successful. Look at Apple, right? Had he made some not so great stock moves in the last 10 years? Yes. But then when he makes the biggest move ever, it's successful. like his biggest stock purchase of the decade or something isn't something that's very successful. It doesn't matter if he makes 10 other mistakes that are with tiny amounts of that. So
that was always what I've been super impressed with Buffett, especially since running the fund with you, right? Is that it's just he constantly was making bigger and bigger acquisitions along the way.
He has
to very
because
hard
he
to do.
keeps sizing them like as big as he can. I mean,
and it's like, what if that biggest one is a mistake? You could completely.
But historically, what you've known with Buffett is more like when he's like, I need to not make it too big. Those are the ones that don't do that well. He's been very good at I'm making the all-in bet. I mean, like he didn't even get all the Geico shares he wanted when he did the Geico bailout. He was backstopping it, so he was willing to take way more. Now it got oversubscribed, so he didn't end up getting it. And it's a combination of preferred, convertible, and common that he got. But if you really look back as to how much he was willing to bet on that, and that was a very good investment, it was huge. Washington Post, he basically bought as much as he could. If you look at what Coke really was compared to the equity of Berkshire, it was a very big purchase. So when he's made those decisions that have really worked out well, they've been really big bets. He's been good at not making dumb big bets. He has sometimes done some not very smart things, usually when he has way too much cash. It's a smaller deal. It's maybe more of a value type thing. But that wasn't the case here with the airlines and precision cast parts. They weren't like low multiples or anything like that.
Can asset-heavy businesses be very good businesses?
They can be good. I don't think they can be very good. And I think Buffett explained that. This is the problem that I think has been at Berkshire Center for a long time. And I really do date it back to like about the time of the Gen Re deal and stuff. Berkshire has changed in the last 25 years or so in a way that I think is fine for Berkshire, and I don't think is a bad decision about what way to take the company in the environment that he had, but is not how he really built his wealth. And so when he tells stories about See's Candies and things like that, I think those are the kinds of businesses that it would be better for Berkshire to buy. And they might be the kinds of businesses it's better for people listening to this podcast to go look for. I don't think he's saying if I had $1 million to invest today, I would buy an insurer. I'm sure he would buy an insurer. But other than that, I would buy, Apple, a giant utility, and a giant railroad. Yeah. And he's said that. There are ways of making good returns, but not great. And it's a good way to invest $100 billion or.
Sure. Lots of questions about, a lot of stuff that was not in the letter.
Okay.
Why do you think he didn't disclose the pandemic and the various effects it had on the economy? We've talked a lot about that, both in the Berkshire letter the episode we did.
I mean, I think it's kind of temporary stuff. I write some stuff to clients, partners, things like that. And I honestly don't want to talk about the stuff generally. What I mostly say is it's a non-representative quarter. And, I mean, I don't know. You have the year before the pandemic. You have you have the data. So you can look at things after that. I mean, I guess he could have gone into a lot of detail about it. But he doesn't like to focus on like temporary things at all. I think he's very aware that when you talk to people, they always want to zero in on this temporary thing and not focusing on long term. And he always wants to get them to say, stop looking at that and always look at everything he writes. It's not just taking a victory lap about past investments and stuff. He always is like, look at the history over 20 some years. Even when he's making investments like Coke or whatever, he's talking about their history from a very long time ago. When he needs to make a reference for, SPACs or whatever today, he's talking about conglomerate things.
Yeah.
He really does not like to ever say like, oh, look at the last 5 years. Even when he makes an argument for like the stock market was too expensive, he draws this graph to the 1990s one that's like over a huge period of time and those sorts of things. If they ask him about GameStop and shorting things and stuff, I bet you he mentions Northern Pacific, the short, which is over 100 or like 100 years old. So I just think he really wants people to get off of the stuff of today and focus in on the long run and all that kind of thing. Yeah.
I like it. We could close today with a question that says, if you and Geoff were Charlie and Warren, what would you guys do in 2021 to increase shareholder value at Berkshire?
Well, I think Berkshire will do it. I think they're going to buy back stock.
Become a cannibal?
I think they'll buy back stock. Yeah.
I like that.
I think that's what they'll do.
I like that. Cool. Want to thank everybody so much for tuning in with the both of us here today. If you like timeless content, speaking of timeless content, I am uploading everything that Geoff has ever written on the internet. I am undergoing this huge task of creating a vault of all of Geoff's archives, and it's going to be on focuscompounding.com. I already started uploading it. I'm also uploading old podcasts onto YouTube, calling it The Lost Archives. So
old podcasts that I did, not us together.
Correct. Yeah. So 2004, 2005, somebody very nicely sent me some old ones from 2010. So if anyone has more podcasts that you have on a hard drive, like this gentleman did, email them to me, or you could
see
DM
how much
me.
I valued them that I kept the hard copies.
Yeah, of course.
Right? You had to get them from someone else.
You know what? Actually, the funniest thing about it is, so I saw like as I'm re-uploading these, I could see when you uploaded them, the time, and it's all like 2:30, 3 a.m., 4 a.m. I'm like, Geoff has literally always been a night owl.
Yeah,
I thought that was funny.
I think that I some of those I remember I recorded very late. And then, there's editing and stuff, but no, some of them were literally recorded very late for some reasons. Yeah. I remember it was much harder to record things back then. I remember having to turn off heating and cooling because of the problems that, you can't start up. I mean, you couldn't start up
because like background noise
or heating in where I was recording, and I had things set up to be able to do that. Yeah, it's a lot easier now than it was. But actually, it was a lot easier within just a few years. That was really early in podcasting.
I told somebody that I'm uploading these, and they're like, wow, I didn't even know what podcasts were in 2005.
It was hard. Yeah. I might have had like Idiot's Guide to Podcasts or whatever. It was, But like I said, a couple years later, it was a lot like it is now. I mean, it really changed over fast. Yeah.
So funny. So anyways, if you want to get access to that, go to our YouTube, hit the subscribe button, and then go to Focus Compounding. This part is free of the website, so there's going to be a ton of content there. So www.focuscompounding.com. I want to thank everybody so much for tuning in with both of us here today, and we will see you in the next podcast.